As we count down to the Bitcoin Halving event that takes place on April 20th, there are some things you need to know. Bitcoin over the past couple of days has sold off roughly in the neighborhood of $6,000. Are we setting ourselves up for disappointment? Or is this time going to be like the last three instances where Bitcoin went parabolic, like life-changing amounts of money were made after the last three halving events? But first up, let's start with what the Bitcoin Halving event actually is. According to Google's definition, the Bitcoin halving is generally considered bullish because it reduces the supply of new Bitcoins, which could lead to an increase in price if demand remains strong. During a halving event, the Bitcoin protocol reduces the number of coins awarded to successful miners by 50%. For an example, since 2020, miners have received 6.25 Bitcoin for solving a problem. But after the next halving, which will take place on April 20th, miners will only receive 3.125 Bitcoins. As a result, the computing power required to create new Bitcoin doubles after each halving. So think about this on a more simplistic supply and demand dynamic. If there is the same demand, or potentially more demand, and less Bitcoins are being produced, that would be like if the government stopped spending money or slowed down. That would be pretty good for the dollar. It might mean less inflation and overall less addition to debt. So what this means in Bitcoin terms is, well, Bitcoin goes higher. In fact, if you look at Bitcoin's chart on a monthly candlestick, you'll notice three very particular rises in price. Back here in 2017, 2018, back here during 2020 to 2021, really part of 2022, but you were on the fall at that point. And then most recently, and guess what caused all of these rises? Well, this shouldn't be a shocker. It was the Bitcoin Halving event. In fact, the first Bitcoin Halving event ever took place on November 28th, 2012. But at this point, Bitcoin was so new, not a lot of people knew about it, so it's not even on a chart in most places. Like literally, you can't find a Bitcoin chart dating back to 2012, at least I couldn't. But indeed, the halving event back in 2012 was also a big positive catalyst for Bitcoin. In fact, Bitcoin's price increased about 152% in 2012. You also had another halving event on July 9th, 2016. In fact, what's interesting is Bitcoin back in May of 2016 was trading at about $400 per coin. After the halving event in July, Bitcoin traded up about 30% or so, up to almost $700 per share. And then what's actually most interesting is Bitcoin kind of traded sideways slightly higher over the next coming months. Starting off 2017, Bitcoin was about $800 to $900 per coin. And then Bitcoin took the big run to almost $20,000 back towards late 2017, in December of 2017. So over a year later, you actually seen the big rally. And then the most recent halving event took place on May 11th, 2020. Something similar happened here as well. Bitcoin sold off right before the halving about 41.5% in a single week. And then you kind of recovered. And what happened? Bitcoin traded sideways for a period of time, up until about October of 2020. So 5 months, Bitcoin didn't do anything that extreme. Traded in a range. And then what happened? Well, Bitcoin went from about $10,000 per coin up to $65,000 per coin. And this part is more recent history. You ended up falling back to about $30,000. $28,000 or so to be more precise. You rally back up to a new all-time high at $69,000, and then you fell yet again down to about $16,000. So if you can't tell, let me make this a little bit more obvious. In prior halving cycles, Bitcoin did not run up into a halving event. It actually did a whole lot of nothing, kind of traded sideways, and nothing in Bitcoin relative terms is like 20 to 50%, right? It just kind of went up, it went down, it just traded in a range. But a range, relatively speaking, is still large if you're comparing that to other assets like stocks. I think we're beyond that. I think we understand. This time around, Bitcoin has rallied really since the start of 2023. The second week in 2023, Bitcoin was up 24%, and it really hasn't looked back ever since. Bitcoin went from $16,000 to $74,000 in recent weeks, and you've started to come down a bit. So it is very well possible from $16,000 until where we are now, you did see a lot of that buy the rumor speculation from speculators in Bitcoin that said the last two halving events were very bullish for Bitcoin. But indeed, they took time. They took anywhere from 4 or 5 months to over a year before the big rally came. And you never seen a rally before the halving event. This time you're seeing a rally before the halving event. What does that mean after April 20th and the halving event is essentially already happened? I think that's up for speculation. I think the safest bet would be to assume that maybe crypto and Bitcoin sells off, at least initially, after the halving event. After all, the last couple of halving events we've had, 3 specifically, well, Bitcoin has not done a whole lot of anything after the halving event. Maybe that happens this time around. But then again, I think it's pretty safe to assume that Bitcoin is going to go a lot higher over the next 6 to 12 months following that event. Minus any interest rate hikes from the Fed, minus any bad specific crypto news or any kind of black swan event for our markets. In recent days, Bitcoin has started to fall alongside the broader markets. You have also seen other kind of risk-off assets like gold really starting to rise also. There's a couple different things to note here. Crypto, generally speaking, likes when money is easy, when interest rates are lower, and you've priced in about 3 rate cuts from the Fed this year. Over the last couple of days or so, it looks like those rate cuts, the 3 that we're expecting, look a lot less likely. We may end up only getting 1, if not 2 rate cuts. But it's important to keep some context in mind because we started 2024 with the expectation we're going to get 7 rate cuts, and what happened in 2024? Bitcoin went from $38,000 at the low towards the end of January and basically doubled up to that high of about $74,000. So even though we were pricing in a lot more rate cuts to start 2024, crypto still went up over 100%, or close to it. Yesterday, Bitcoin sold off about 5.5%. Currently, Bitcoin is down over 3% at the time of recording this video, so roughly an 8% decline over the past 2 days. You have started to see some massive liquidations in the crypto market in the past 48 hours, with 121,325 traders apparently being liquidated, contributing to a total loss of $395.1 million. And recent reports from QCP Capital have revealed a surge in funding rates on platforms to stake coins and do business in crypto, soaring to a whopping 77% before abruptly falling. This underscores the rapid shift in market sentiment that is taking place right now. April 1st also marked a substantial net outflow of about $86 million from Bitcoin spot ETFs, signaling big money may be pulling back a little bit. Which again, given Bitcoin's rally of almost 100% in 2 months, that would make sense to see some kind of profit taking. But I think the bottom line is making comparisons to prior halving cycles doesn't do a lot of good for the short term following April 20th. Because in all of the other halving cycles for Bitcoin, you never seen this kind of run up heading into the event. Those big gains actually came long after the halving event happened. Considering this, it would make sense to be a little bit more conservative or defensive with your outlooks for Bitcoin following April 20th. But despite what you're going to hear from big money, other crypto traders and investors, the longer term, the next 6 to 12 months following April, I think are going to be pretty good. At least that is what the data from past halving cycles would suggest, especially as we do start to get material rate cuts from the Fed, which currently the markets are expecting the first Fed rate cut in June, and we're only expecting 3 for this year. If we get more than that, that will be really good for Bitcoin. Because historically, Bitcoin loves when the Fed cuts rates. And as long as governments continue to spend money like they are drunk and we continue to have inflationary pressures and the dollar, as that's probably what you guys are holding in your wallets if you're watching this video, or some other kind of fiat currency, if they continue to get inflated, there will always be a market for Bitcoin, and these halving events in the past have yet to give Bitcoin a long-term bearish reaction. So in other words, let me simplify all of this for you. The last 2 Bitcoin halvings in 2016 and 2020, you didn't see much of a reaction to Bitcoin until after the halving. We're talking months, or back in 2016, over a year before you've seen the big rally. But inevitably, those individuals that bought around the halving made life-changing amounts of money. But it did take some time. This time around, everyone's come to expect that Bitcoin is going to rise after the halving event. So maybe there are really high expectations baked into Bitcoin, and maybe Bitcoin does go through a cooling off period after April 20th, or maybe before. And just maybe, we're starting to see that right now. But let's not be confused. For long-term investors in cryptos in general, especially Bitcoin, Ethereum, your mainstream cryptos, 6 to 12 months from now, you should have made a ton of money, as long as history does follow through with what we have experienced in the past. Keep in mind, history does not always repeat itself, but it usually does rhyme. And of course, I am not a financial advisor, so contact one if you are curious. He will probably tell you to stay far away from cryptos to begin with, so good luck with that. Thank you for watching. Enjoy the rest of your day. Hit the like button as well as subscribe to the channel if you feel the need to, if you learned anything or like my perspective that was provided. You guys enjoy the rest of your day, and I will see you in the next one.